Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go over technical analysis, gold and silver. We're going to see which way it's breaking from a medium to long-term perspective. We're going to look at the dollar, we're going to look at the 10-year yield. Again, that's the 10-year yield prices everything. That's what prices assets. And what I'm looking for in the 10-year yield is a higher 10-year yield if we have inflation. That means people are selling bonds and that yields are going up. The dollar, I think if they're going to hold yields down with quantitative easing, with yield curve control, with whatever they want to call it, them buying bonds, them being the Federal Reserve, if they're going to do that, then the pressure mounts at the dollar. It might not mount at interest rates, because holding interest rates down basically essentially props up all of the assets that they want to prop up. Stocks, bonds, and those assets, the paper assets. Hard assets do very well when money rotates from bonds and stocks into hard assets or precious metals and commodities. So that's why I'm looking at the 10-year so much and the dollar. I think if they're going to try to hold interest rates lower, the pressure mounts at the dollar then. If we have short-term problems, which we very well could be, we very well could have short-term problems here, where we don't get inflation, where there is still bad debt in the system, and it has to work its way out. Bad debt and the destruction of that debt is deflationary. And if we have a deflationary scare, what we would see is the 10-year would fall because people are going to run into bonds because they're scared of something, the banks or whomever. That's our signal. And then we should see, so yields would come down as people run into bonds, and we should see a stronger dollar, which means people are also converting money into dollars. The stock market may or may not go up. I mean, it may go up because dollar-denominated assets would go up if the dollar is stronger. Now, what I am proposing and what works for a inflationary environment is every time we have the real estate market in expansionary phase, it's been inflationary. Inflationary environments put pressure to increase interest rates higher, and it puts pressure on the dollar to go lower. That's happened every time we've had an expansionary phase of real estate. We are in the beginnings of an expansionary phase of real estate. So the market conditions, when you look at that, means that we should be seeing a weaker dollar. But we've had these anomalies in history. We've had the economy shut down for a couple of months, which has never happened before. And there could still be bad debts in the system that need to get worked off. Where are they? I don't know. But they may be out there. And I don't think that it's going to come from the housing real estate sector, from forbearance and all that. I don't see it yet because the inventories are so low. But it's something to monitor. So I'll jump in here. Well, I'll go over what's going on currently and give you it's just my opinion. So here's the dollar. The dollar's flat. And guess what? Gold is flat. Almost the same amount. And you can see these are inversely. This goes down, this goes up. And then as the dollar went up, gold went down. And you can see these two are inversely correlated very tightly right now. Doesn't mean it's always like that, but it is right now. We've got the 10-year yield. The 10-year yield is in a decline. We've been pulling on back. Someone is buying more bonds. I don't know who. But we do have, this is a hammer pattern here, wick on the bottom, wick on the bottom. We shot on up, and I think we're going to move sideways for a little bit. And then maybe it'll try to break to the upside, or maybe we'll stay in this downtrend line. We'll have to watch and see. The dollar does look like it could be bottoming on the short term. Here we go. We're kind of putting in these double bottom. We're coming on up. It's got higher lows. We could break through this, or maybe not. Let's watch it. If we break through it, we're probably going to have a pullback. Definitely in commodities, we're going to have a pullback if the dollar goes on up. Because the dollar, it's important because the dollar, all of our commodities are priced in dollars. And if the dollar is going up in value, it's a headwind for our commodity investments. Here's gold. I charted this out. It's a big old pattern. I used the top here and just ran it through. And then I used these bottoms down in here, the bottom here, a couple of bottoms here. So I think this is a good strong trend line. We did break to the downside. We came back up. Watch for this move to the downside. If we break to the downside here, we could be heading lower for a little bit. If we break to the upside out of this channel here, like 1850 and close up there, you know, we're good. It's still an upward momentum move. So we're consolidating right to a point. We're coming to a decision point here very shortly at the tip of this pattern. Subscribe to the channel if you want to. We're going to continue to watch this on a daily basis. Silver's broken to the downside, and it's chilling out here below its pattern here. So I would suspect sideways to lower is what I would suspect out of silver in the short term. Platinum, I went off the bottom here in all these guys. We could still see something in the low 900s, a high 800s even, if this were to continue lower. It's still a possibility. GDX, I've got this basically downtrend line, support line. We were above it, and we broke to the downside today. I suspect we could have we could go lower here if the buyers don't step in and push it above this trend line again. Here is SILJ. Again, we're breaking these patterns to the downside. Does not look good. We could see more, I'd say, sideways to lower unless we pop back higher. But the momentum is definitely to the downside, where we could see better buying points in the future. Franco-Nevada broke through its little support line here to the downside. Our next support line could be somewhere in here, and it's a weak one at that. So we'll see where this thing ends up. In wheat and precious metals, I'm just taking two royalty companies, the big boys. It's still in an uptrend. It's still looking all right. But overall, a lot of the sectors coming under pressure. So that's what I have for today. You know, I see these things. We still have downside pressure. The sellers are winning. We could have something in the short term here that is deflationary. What it is, not sure. Doesn't matter what it is. We're seeing the dollar strengthen. It's been pretty strong the past day or two. We still haven't broken out of that pattern yet, so we're waiting. We're starting to see some of these ETFs start flirting with the downside, and we're breaking stuff to the downside. So let's see if this stuff holds. Let's see what happens. Again, I still see strength in the real estate market, which means it's inflationary. If it is inflationary, these guys will eventually turn and move higher. I can't tell you when. We may have a 6-month detour where we pull on back and come and create some other pattern. And that's what markets are. They take time to develop. They take time to play out. And we may have better buying opportunities in front of us. We have to wait and see. So I'm holding on. I'm not selling my shares. I am holding on. The market conditions are the same. The valuations are still good. I'm not going to sell something that has good valuations and good market conditions. I'm going to wait to accumulate more if we get better buying opportunities. That's what I'm doing, and that is not a suggestion. It's just what I'm doing. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't. And thank you for listening. This is Finding Value.